Hey, so I just want to do another video back testing using the bar replay feature on TradingView. Sunday market's just opened, and I don't really want to take any trades right now. Kind of want to let the Asian session play out, but I do want to mess around with some strategies and stuff. I do want to mess around in the charts, so this is a good way for me to do that and not be actively live trading. So I'm on gold here, 240 or H4 chart, and I'm just gonna scroll back to a random area. Try my best to be super random, and let's hit that one more time, and then we'll go forward twice, and right there, we'll just say right there, that's a good area. So up here on TradingView, there's an option for bar replay. I'm going to click that, click that icon, and I get a vertical line. I take my vertical line all the way to the right side of the chart, click on this bar, and everything forward of this will disappear. All the price action forward of this mark will disappear. And now I can go ahead and mess around with the charts without actively trading, without being taking any high risk trades during the Asian session. So I'm on the H4 chart here, and right away I want to put in some trend lines. Actually, I like to use the ray, and that allows me to do this. And I like to do my trend lines from the peak of the swing high wick to the body of the next candles, like that. So it looks like we have a H4 downtrend that tested. Well, here it set the trend line. Here it tested it again, making the 3 taps, confirming the trend. As far as the trend line, came down, tapped the trend line again, but broke through it this time. So we have a breakthrough on this trend line as far as going through swing high to these bodies. Now I can add another array from the swing high wick to the wick. I could take that wick, or I could come through a couple of these. I'll just go to this candle's body, and at the same time still maintaining the touches on these wicks. And they say three touches on a trend line, and you got a trend. So let's go to that candle's body. There we go. So we kind of have price in between these 2 lines. Now what I'll do is I want to put a bullish trend line or a bullish ray on there, and we'll go with this one low here. We'll see where we end up. Okay, I'll go to the body of this swing and see what that gets us. Okay, I could probably put another trend line on there. Let's go from this swing low to the body there, or here, and that looks pretty good. If I would have put one more on there, I'm pretty sure we would cut through the price action. And I could go to this, probably there, and then you can see we're up here cutting through all the price action. I could, well, I might be able to do something like that, but I don't really want to. So what I will do is we'll get rid of this guy and punch in and put a ray here. We'll do that. I'm good with that. We'll do that there. So we have a large uptrend, and we have this downtrend, and then we have this smaller little bullish trend right here. Just a swing low and 1 confirmation. So what are we going to do? We are going to take the I think we are going to take the bearish trend lines. I see RSI showing bearish hidden divergence here. Bearish hidden divergence here. And here. And then possibly putting in bearish regular divergence here like that. But we'll see when we advance the chart forward. Okay. Now I can go ahead and plot zones if I see any. Let's just move this guy. Alright, let's look for any very like obvious zones. So here we have 1, 2, 3, kind of like a triple top. I'm pretty sure there is some divergence in there, and as well as a zone. Drop in a regular divergence. Let's see, here to here. Okay, that's hidden here. Okay, we got a zone there. We have a zone here. We have a zone here. And we'll take those two zones. And probably this hidden divergence zone. So we got divergence there. We have divergence actually straight through like that. Straight through. And on price action, we could go like this. And we can go like that there. So 1 and 2. And in there we have two zones. We have a zone here. And a zone here. We determine that by drawing your trend line on the RSI from the lowest point possible. So if we did that, we didn't hit a point yet. Get another trend line. Go to the next lowest point. Still no hit. Go to the next lowest point, and we draw our line in. Now it looks like I picked the wrong point. It looks like this is the zone here. That's the zone there. So I picked the wrong point. And then we extend this line and see that that zone is correct. So we find the candle relative to those points. There. And there. I get my rectangle tool. And, oops. And I draw my zones in. There's one. And here's the other one. So overlapping. And I always like to say that the overlap sections are strong levels. Alright, so that looks good. We have a zone above price action. Let's see if we can find a zone below price action. Actually, I see hidden divergence here. Some hidden divergence there. And on price action, we mark that out like this here. And just because it's there, and I want to show it a regular divergence immediately following the hidden divergence, which is a strong signal. So there we go. Okay, now let's look at the zone in between this hidden bearish divergence. Yeah, by taking our trend line and finding the point where it first touches, which to me looks like that point there. And mark this on our chart. Okay, there we go. Alright, so we have a zone above, a zone directly below, and can we find one more a little lower than that? So here's this low. Where's the zone? I'm going to go back and find the zone that caused or was a support for this low here. So it's in this area, in here somewhere. Let's see. So we have an uptrend. I want to look for bullish hidden divergence. And I see one right here. I see a bullish hidden divergence right here. Right here. Okay, but I can already see that it doesn't create a zone where I'm looking. It doesn't give me the zone I'm looking for. That zone candle is all the way up here, and I'm looking for a zone down in here somewhere. So let's see. Okay, we have another hidden divergence here, like this. Zones here. That's high as well. That zone candle is high as well. Okay. Anything in here? I don't see anything that good. Okay, we have some more a little farther back. Let me mark this divergence out there. Put this back here. And again, since this run is bullish, I'm looking for a bullish divergence. I see one right here. Right there, bullish divergence. Now, we need to find our peak. Take a high point. We're looking for, from this point to this point, we're looking for the peak. Peak in between here and here. We're looking for the peak in between there and there. We're trying to find the peak in between these 2 points. We take our trend line, find the highest RSI peak we can find, come across, and the peak in between these 2 points creating the divergence is this point here. That is our zone. Mark our zone candle, which is here. So the way I look at it is price. Okay, we created this zone on the RSI with divergence. This divergence is saying that there's a strong possibility price wants to go up. Price wants to go up based on this divergence. Now, there's most likely a level price needs to break in order to make new highs in this case. So in order for this divergence to play out, there has to be a level price should break and then be able to create new highs. And the way I found out to find that level is by finding these zone candles. So if we look at this candle here, I say that this is the candle price needs to break to make a new high. This is the strength right here. And if we grab our rectangle tool, draw our zone on this candle, and come across, you can see that this candle was in fact the control. This was the control. The consolidation stayed in this candle until the breakout. So consolidation stayed within this candle until the breakout. This candle was the control. And this candle is also relative to the peak in between the divergence. So, and if we look here, price came and retested that zone off of this zone candle, off of this peak. So number 1 is the divergence, number 2 is the peak in between the divergence, number 3 is the zone candle, and number 4 is the zone. Price stayed controlled in this zone created by this zone candle till the breakout. Then it came back and it retested the zone created by this zone candle. Tested it, retested it, and created new highs. Okay, so I have 3 zones. This is what I like to look for. I like to identify trend. I do that by placing trend lines. We have a big long-term uptrend that's still intact. Here we have a mid-term bearish trend, that's intact. And then we have a short-term uptrend that's also intact. So I'd call it there are three different trends that are all intact here. Now, based on where price action is now, and this bearish hidden divergence, my stochastic is overbought. My stochastic is overbought. And I see a potential, off of the bearish hidden divergence, I see a potential bearish regular divergence forming, still controlled by this bearish trend line here. This bearish trend line is still holding. And the only thing is that it broke, price broke through this zone. Price broke through that zone. Based on that, there is the possibility of more upside, but I think the bearish confirmations outweigh that bullish confirmation. So I'm gonna mark up, or I'm gonna put a fib on this potential, bearish regular divergence that I see forming there. So I'm gonna put a Fibonacci extension, trend-based fib extension. I'm gonna put a Fibonacci extension on this potential M that's forming on my RSI, and the potential M that's forming on price action. The Fibonacci extension, the way I do that is I take the peak of this end of the divergence, find the relative high on price, which is right there, and I start my fib at that level. I find the low, or the peak between the divergence, or the low of the divergence, and I set my other end of the Fibonacci extension there. Then all I do is come out to the side, and I set my zero level. Back at the high of the first leg of the divergence, which is here. So basically, really quickly, I go from the high to the low and back to the high. High to the low of the swing, and back to the original high. And I get Fibonacci levels. You can see there. Now what I do is I enter at the 618, the 382, or the 236, depending on where price action is at. At this point, I'm taking a short position. I come down here to my short position option. I wait for the candle to close. And this candle closed around the 382. I could choose to get in at the open of the next candle, or I could wait for the RSI to turn down. I want to wait at least one more candle. So I'll advance the chart forward once. Okay. And I may have just missed the trade. Not to worry. So, okay, let's do this now. We'll say, here is our level. Here's our control level. Here is that candle in our bearish regular divergence. Now, price closed, price broke, and closed below that level. So it made an M, and then it broke and closed below. The RSI made an M, divergence came down. What I missed, I didn't put an entry on any of my fibs. I missed the trade on that candle. What I can do here is to still try and make some kind of trade, some sort of trade out of this. What I'll do sometimes is I'll take, instead of the Fibonacci extension, I'll take a regular Fibonacci retracement. And most times when you see an M like this, when you see an M and you have a break and close of the structure level with the M, you look for a 618 retracement of the second leg of the M. So take my Fibonacci retracement. I take the high of the second leg. I come down to the low of the breaker structure, and I now have a 618 fib. I can wait for the 618 fib retracement and try and enter this trade and still catch pips. Another thing I can do is that I've really been liking. I've been doing this a lot lately, and I've really been liking it. Another thing I can do that I've been doing a lot lately, and that I really like, is to, instead of fibbing the whole swing, I'll ask myself, what are the chances that price will retrace and actually take out the high of this current 4-hour candle? What are the chances price will retrace and take out the high of this current 4-hour candle based on this M and this bearish, both of these bearish divergences, the bearish hidden and the bearish regular, the bearish trend line, the M formation, the breaking close of structure? With all these confirmations, what are the chances that price will come up and take out the high of this 4-hour candle? To me, the chances aren't that great. So instead of fibbing the entire swing, I will drop a Fibonacci retracement on the 4-hour candle, which gives me a better risk reward. I come down and get my short position, and I try to choose a fib. I try to choose a fib level that I think I'll get a retracement, and that has a good risk-reward ratio that I feel comfortable taking and getting into a trade. So 50% retracement looks like it's coming in at the structure level. Let's, for the sake of it, say we'll take a 382. Take a 382 retracement. I personally like a 144 level as my stop loss, and targets, I like the 144 on the other end of my fib. So here I'm looking at a 1.73 to 1 risk reward, 92 pips stop loss. This is a big stop loss, 94 pips, 95, with a 160 pip target. Take profit 1. So take profits can go like this. Take profit 1 can be a 1-to-1 risk reward. 94 pips risk, 94 pips take profit. That can be take profit 1. We'll set that as TP1. Then take profit 2, 144. Take profit 2 will be 144. Oops. Take profit 3, if you want, it'll be 233. And then, if you want to scale out, if you want to enter the trade with multiple orders, or if you feel like just holding, I've extended targets. We see my 3618 comes in right at this purple bullish hidden divergence zone. Is still really fresh. Or mid, you can come in at the midway of the zone at my 4618, or potentially the bottom end of the zone at the 5618. Maybe price will just come to the trend line here and top the trend line. Let's do a three take profits with 1 position to run on. So 4 orders on this trade, and let's just say, for the sake of it, just a 001 lot size. So we're risking $9.44 times 4. So $10. Basically, we're risking $40 here. $40 with 4 001 lots with 3 take profit levels. And at this point, I am ready to run the chart. At this point, I'm ready to run the chart. Play the bars forward. Are we going to get stopped out, or are we going to go on to hit our targets? And let's press play. Okay. Okay, whoa, for some reason I couldn't stop the chart, but we can see that we hit our take profit 1, TP1 was hit, TP2 is hit, TP3 is hit. So we have about $30 We made about $30 in this trade. $30. Actually, we made more than that. So TP1 was $10. TP1 was $10. Take profit 2. Take profit 1 is $10. Take profit 2 was 16, so 26. Take profit 3 is 25. $50. We're at $50 off of this one trade with $40 risk. And one position still running. That position goes to break even now. Our stop is at break even. Put a break even stop in here. And we're risk free and able to let this trade run on. I'll move my box out a little farther so we can let the trade run on. And we'll bring the box out a little farther. And I'll leave everything else there. We'll just let the trade run. And we'll hit play. So we're now risk free with our stop in profit. And we've hit TP1, TP2, and TP3. And let's press play here. Still under the bearish trend line. Okay, and there we go. There we go. Our fourth position. Sorry, I couldn't stop the charts, but our fourth position hit break-even stop. So risk of 94 pips. Risk of 94 pips. And we took profit at 242 pips. So we can move this up, and we'll see that the 2.5 to 1 RR. And that is a trade. That is one trade broken down. I'll screenshot this and post a pic in the group. I will screenshot this and post the pic in the group.